No one buys a condo thinking the value is going to go down. Most people always assume that real estate always goes up. But what a lot of people don't understand are the hidden risks behind buying a condo that can not only crash the value, but make your unit nearly impossible to sell. And what's wild is that it has nothing to do with what it looks like on the inside. If you're thinking about buying a condo, already own one, or are an investor just trying to understand the risk, you need to watch this before you're stuck. So today I'm going to be explaining why condos can lose value faster than single family homes and how to spot the warning signs early so you're not the one asking, why isn't this selling? Hi, I'm Justine. I'm a Phoenix real estate agent and investor, and I did not learn this stuff in a textbook, guys. I learned this by making mistakes and having an extremely hard time selling my condo, and I'm here to share with you so you don't make the same mistakes I did. I'm a brand new creator here on YouTube, so make sure to like and subscribe. It helps my channel a lot. Let's get into it. When people hear impossible to sell, they think I mean that no one will ever buy it, but that's not usually what this means. What it really means is that your buyer pool shrinks fast, lending becomes hard or impossible. You start hearing people say cash only, deals fall apart halfway through escrow, and price reductions become your only tool. Meanwhile, houses in the same price, same part of the city, same market are still selling normally. So it feels personal, like you did something wrong. But most of the time it's structural and not emotional. Here's a major difference between single family homes and condos that people don't think about. When you're selling your single family home, you're just competing with the houses on the street. But in a condo complex, you're competing with every single unit, and there can be a lot. If one owner underprices because they're desperate, if one investor has a bad tenant, if one owner lets their unit go to crap, that instantly becomes a comp for you. And they're gonna base the value of your house on what that one sold for. And you can't opt out. So you could have the nicest complex, the most renovated unit, and your value is still gonna be decreased because you can't control the supply. When HOAs underfund reserves, delay maintenance, or keep fees artificially low, it feels fine at first until it isn't. Then you start seeing deferred maintenance, special assessments, insurance premiums skyrocketing, and lawsuits that nobody wants to talk about. And lenders hate uncertainty. The moment the building starts showing signs of legal or financial instabilities, lenders back out. They're not gonna give any loans. And once lenders stop lending and only cash buyers can buy, well, the value starts dropping fast. Cash buyers don't pay market value, and there's not very many of those buyers. And typically when these issues start to arise in a condo complex, it's not just one owner trying to sell. It's usually a lot of owners realizing, oh my gosh, this is going a bad direction. I gotta get out of here ASAP. You could see an entire building for sale. So let's talk about financing in unwarrantable condos, because this is the part that most people don't realize until they're under contract. Some condos can become what's called unwarrantable. And what that simply means is that lenders have decided that they can't take the risk on it and they're done lending in that complex. And this can happen for a lot of reasons. Too many rentals, underfunded reserves, lawsuits, insurance gaps, or just too much high investor concentration. And the scary part is you can have perfect credit, great income, look like the perfect candidate and still get denied for a loan because of the unit. And when buyers can't get loans, the value is gonna free fall. Houses don't deal with this kind of risk. What happened with my complex is that it was warrantable when I bought it and I used a conventional loan to buy it, just for it a couple of years later to become unwarrantable and crash the value. Unfortunately, one of the ways that complexes try to become warrantable is to increase the fees to fix the problem, but that in itself creates an even bigger problem because the higher your monthly fee is, the lower the value of your property goes as well. So like my complex, they've pretty much tripled the fees, but it's still unwarrantable. So the fees are so high, which has also hurt the value, but the complex being unwarrantable has double hurt the value. It's a lose-lose situation. And single family homes just don't have these kinds of risks. That's why in changing housing markets, you see condos getting hit first and recovering last. So let's talk about why houses recover better. Houses are a simpler asset. One owner, one budget, one insurance policy, one decision maker. There's no shared walls, there's no shared financial reserves, and there's no HOA votes that can change the whole fate of the complex overnight. And on top of that, you actually own land And that's why we see houses recovering faster and holding their value much better than condos do. Let's talk about green flags and red flags if you're still considering a condo. But I want you to keep in mind that even if you buy the condo and it looks perfect on paper and all green flags, that doesn't predict the future. The only thing that you're looking at in condos is the historic data, because no one can predict the future. So you must be aware that things can change, like it happened to me. But if you're thinking about buying a condo, the things you really need to make sure are that the reserves are healthy, there's no lawsuits, the complex is warrantable, the common areas are well maintained. You need to look at all the reserve studies, all the financials. You need to read every single document, rule, and CC&R. You need to understand how the board votes and go to every single board meeting. You want clear, strong insurance coverage, and you want to make sure that there's a high homeowner percentage of occupancy and ownership. You don't want a ton of investors in there. If any of these things feel off, you're not just buying a home, you're buying into a shared risk and liability. This isn't meant to be anti-condo. Condos can absolutely make sense for someone when the building's well maintained, the reserves are healthy, the HOA is healthy, and the buyer understands the risks and trade-offs. But condos are not passive purchases, and they do require understanding and awareness. I know I regret buying this thing, but I want to know what you think. House or condo, leave it in the comments. If this helped you, make sure to like and subscribe, and make sure if you know someone considering buying a condo to share this with them as well.